Hey, what's up, everybody? It's Beer here again, and today we're gonna do Tesla. This is a highly requested ticker for this series. In this series, the technical analysis routine series, we go from bigger time frames down, and we don't just find plays; we find crucial levels with reasoning. So this is a good thing to help people go back and help with their charting as they try to develop that skill. So what I like to do is I like to start on the weekly and start with marking emerging candles. An emerging candle is a candle that breaks a new zone with volume, or I mean that's pretty much all of them actually. I'm not even gonna try and elaborate more on that definition, but like right here, this would be a good example. Like it's a green candle popped up off volume, and all right, so I guess I could redo that. It's a candle in which is breaking a new area, or a candle in which is breaking out with volume. So that broke a new area, and then let's look for a volume example. Like right here, this would be a good example for volume. But this is pretty much what I mean, though. I like to mark the tops of all my blue candles that are breaking new areas, because that gives me a good first general, start. And then a lot of the time, I'll end up drawing my trend line either on this time frame or the daily. I think I'll just wait and do it for the daily. But if I was to go ahead and draw one from here, I'd probably wait until after this breakout, and I draw this line because I like that. It lines up with 1, 2, 3, 4, 5, 6, and then it kind of uses today's number price. But I'm not going to worry about that. So just instantly off the rip, you can kind of see a bullish pattern forming, kind of what you saw here before it broke out again. So I'm looking for a big bullish breakout already on Tesla just by looking at the weekly. I have yet to even break down the time frame any further, which we will. But I just wanted to cover that. When you do your trend lines, do it on the bigger time frames first, and then break it down more and see. But now let's go to the daily, just to get a second review, just make sure everything we like is here. So yeah, we got all these levels. So now we can kind of zoom in here because we got current prices over here. So we don't need to worry about all this bottom stuff. But at least we have some, future supports marked in case it does happen to go that low. And no indicators too. That's another part of this series. We don't do indicators. I just do straight lines. I don't worry about any of that other stuff. And I mark every candle for a reason. I give that reason every step of the way. So let's continue. So just from that, it looks like I have a bullish pattern here still, even on the daily. The only thing is this turtle head here, which is the all-time high, so that's okay. It doesn't need to be 100% perfect, but we want to have every line here drawn for a reason, which so far we do. I don't think I'm going to add anything else on the daily. I kind of like everything we have marked. We see that there's a big squeeze as price converges into one corner here. I like to see that as like a balloon being filled with a ton of air. Eventually, too much air is going to be in that balloon and it's going to pop. So you like to have double confirmation, which you can refer to my other videos for that. But we like to have lines marked on both sides just to make sure, so we're not going to miss anything. But it looks like just from the weekly chart, I got a bunch at the consolidation mark, but I'm going to go ahead and mark a couple more. I like this line. It's an emerging candle. Also uses a support before it 4-bar played up more. It was used as a support, resistance and support here as well before it moved up this trend line again. So it's following that. I like that a lot. So I think I'll move on from there. I like that. I only used one more line on there. We can go down to the 4-hour, but I'm just going to go ahead and move down to about the 30-minute and the hour because we already kind of broke down the levels that are there. So let's see right here. So as we're approaching the end of this squeeze, what do we see? Just try and mark anything that we haven't marked before. We still see our increasing levels of lows here. Our lows are higher on as they increase towards this little corner here, and our highs are getting lower as they increase into this corner here. So even on the hourly, we have a squeeze. So let's move down to the 30-minute. Let's zoom in on current price. And what do we have? We're still kind of tangling with that 409, 410 level. So what is the level that we kind of need to break above here soon? Well, I instantly see that there is about a range right here. So I like this level for a couple reasons. Resistance, it covers all this range. You have your 40% breakout from the BB system, and then you have your 80% retouch, and then you have a big move up. So we know for a fact 417.50s is a level of comfort that needs to be broken before a big one-directional breakout can happen for Tesla. What's a closer level? Well, if we're discounting all that stuff and we're just looking over here on the right, we see that we have a double top here, 1, 2, before it made a further move down. And we see that we have a nice little squeeze right here above the trend line. Made a higher low right here, going from previous day to today. So it's looking very good for a good breakout above 413.40s to 417.50s. And then above that, we're going to be looking for this gap range right here, which I want to mark next. Gap ranges need to be on your checklist. If you guys don't have it, you need to have guide number 3. Guide number 3 covers a lot of this. And what I like about this gap range the most is it covers a little bit of price over here, but as well as Price filled down here. It took its time to break. It did a 40%, 80% right here. So it's nice. It didn't just break through. It also came back up and also said, hey, you know, we have control of this. Had a one directional drop, which you'll get those one directional drops like that whenever you have that test. Whenever you have a break of a level and then a retest of it, and then it follows the same direction, that second drop is normally the more one directional one, which in this case both were one directional. And then right here we had a second retest. Came back up, hit that wick, which right here we're on the 30-minute, but these will be the intraday highs of those days, so it's probably a candle for the most part on those if you go down to like the 5-minute per se. But that's what I see on Tesla. So instantly going off that, I know for a fact that if I break above 413.40s, I'm looking for 417.50s. If I break above that, I'm looking for these levels. There's always another target. It's never just, oh, I'm getting in a call and it's going up $100 a share and I'm going to be rich. No. There's a plan. You got to have a plan. Your plan is to break between each of those levels as you move, as price moves further to the right. And then over the big picture, which is why I like this series so much, is not only do you have the smaller picture mark, you have the bigger picture mark. So you're not only looking at these levels right here to break up, which looks like jumble on a bigger time frame, but that's why we go from big to small, so you can break it down and not be so clustered. But every single level we marked has a reason. We now have a plan for if it does break up. What's our plan if it breaks down? Well, we're still going to be watching this squeeze. Just because it's a more bullish squeeze doesn't mean it can't break down. So that's why we use our double confirmation. So what's a level of strong support that if broken would drop pretty big? Well, we want to look over to our right. You know, we want to look for some gaps that are also outside of the squeeze. So just instantly I see this level because right here, it's a gap. So that would be one level that's outside the squeeze. Now, what else? It says 400. That makes this line even stronger because it's not just a technical level. It is a psychological support. If you were to break 400 to the downside, that would be pretty big. If you're to break 400 and stay under this trend line, it's going to be even bigger. If we were doing the opposite, say vice versa, if we're going up, if this was to break at 500, there's a big chance it goes to 505, 510, 515, 520, 525. You see where I'm going with this? The fives and the zeros, the even Steven numbers that everyone really likes to look at. That's a real thing, the psychological plays. If you want to go check out my charting at all-time highs video, please do so. It covers a lot more in depth on that exact topic. But yeah, I just really like this series because you cover the big stuff, you cover the small stuff, and you get a plan for both above and below. You don't just focus. And now it looks more bullish, yes, and I'm going to be way more biased towards bullish, but just if it breaks something with volume, I'm not going to ignore it. If it's to break lower, I'm not going to ignore it. Like today on Zoom, this is a great example on this. This is a call out in chat that a few people made pretty good money on. But we saw this breakout, and it still has all this extended hours information to get above, but it was looking really good. It was looking like a nice little bull flag. But I said, we're not playing this unless it breaks above this flag, or if it breaks below this emerging candle, which was also, what do you know, a support. So that's a really big level. It's not just an emerging candle, it's also a support. So I said if it breaks this, we're shorting it. A few people ended up shorting it here, made pretty good money. And look what it ended up doing now. It's an 80% entry. So now you have that retest, and it's looking like it's going to make a more one-directional fall. So that's why I like to cover always playing both sides of squeezes, because it can always be a pretty big deal. A lot of people tend to get really biased when it comes to flags and continuation patterns. And yes, they're really good patterns and stuff. Don't get me wrong. I love patterns. Pattern recognition is one of the most important things in my chat. But a really big topic, though, is playing the double confirmation of if it breaks out to the other side. A lot of people aren't good at that. They just ignore it. You shouldn't ignore it. You should be taking a full advantage of it, because they can make you just as much money going down as it does up. So, we can do one more ticker, I guess. We can do NVDA. We go to the weekly and we clear the chart. Already is. Cool. All right, so doing the same thing as I did on Tesla. I'm just marking this past resistance that was turned support before a bigger push up. Let's mark some emerging candles so we can focus on this here now. So we can mark that. Let's just mark a few more important ones. That one, that one, that one. There's a nice gap range here. Just marking emerging candles. That's all I'm marking so far. Let's move down to the... Oh, wait. I think it's fair enough to draw this. Let's go to the daily. Nice. We see our strong uptrend. We have all of our emerging candles marked. Let's kind of focus more on the current price area. Do we see anything we want to mark extra? Nice 5-bar play. Continuation bullish rectangle here. And as you're going across it, if you notice patterns, like call them out in your head. Like you repeating that out loud is just like reading a flashcard. All right, so I don't think I want to mark anything else on this. You know, I might mark. Ah, and look at this. I missed one. If I extend that, it almost marks that emerging candle, which I might just raise that a little. Yeah, I like that it touches that one, gets that good resistance before it stops there. Gets this resistance, almost touches there. So 552.50 is a very strong level, clearly. So now we could break it down to, let's say, the 1 hour. So let's focus a little more on current price. So we're going to zoom in about right here. So current price is about right here at 541.50. What do we see in that area? So I actually see a nice resistance right here that happened before all this happened. Resistance there was a resistance here on this slight head and shoulders before a push up. Support, 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 breakdown, 80% breakdown, gap, gap. Okay, yeah, so I'm going to leave that 542.70s because it's used a bunch. It's being used this exact second, actually. So let's break it down to the 30-minute. Zoom in on current price. So what are we looking now for short term? We're long term clearly in an uptrend. We're bullish. And there's retracements. If you guys want to go check out my trend lines video, that'll help you out on primary, secondary, and tertiary trend lines. That'll help you out with this kind of topic. Let's see here. What do we see? So we see a pretty common resistance here that happens about 1, 2, 3 times about right here. So we're going to go ahead and mark about right here because this information is extended hour, so it's not as strong since there's less volume. But this is intraday. This is intraday. This is intraday. So that's during the day trading. So we have a strong resistance about right here, and right here. So it looks like this 542 to 546.20s range is a pretty big range for NVDA calls. So we'll be looking for that. Above that is 552. Above that we can say 582. I wouldn't be comfortable keeping that as my next target. Let's zoom out and see. All right, so I see that we have a pretty clear resistance right here. 1, 2, 3, 4, 5, 6, 7, 8, and then you have a one directional break through it. So 565 is a good target, but you also have a nice little gap range right here. So that would probably be your best next target. I'd say that'd be your next target after 552 is 557 to 562, and then above that's 565. And then, you know, as more time goes on, you could delete some of these lines, go back in, and, you know, restructure where your next targets are. Because, of course, there's a line here. There's a line here, but you don't want to cluster your chart too much and, you know, go blind looking at all this. So you don't got to cluster yourself like that. And then also, now that you have your plan for above, let's look below now, just like we did on Tesla. So it looks like this pretty strong support. That's probably from the weekly chart, price level 8. So it's probably on the hourly chart that I marked this one. But what do we see here? We see a support, break, resistance, had a gap up happen here, a one directional break back below it, had a retest right here on it. Had a big move back above it, support, support. So 526.35 is clearly a very strong level if broken. Now what do we see right here? I see a resistance as well as a nice gap starting right here that I'm honing in on. I like that little gap range right there. And it'll definitely be used again. So it looks like if we can break back below 526, the next target would be about 522 before we get to this trend line. And then your next target, of course, would be trend line or one of these levels in here. So the big deal, though, with this series, and what I like this so much about is it helps you charting, but it also helps you memorize. Because a lot of people have a problem with, oh, how do I remember this? How do I remember that? How do I remember this is important? I mean, you know that a gap is important. You know that if you see an all-time high resistance, it's important. You know if you see a low of the time frame, that's important. So it should mean no different when you go start detailing inside of those levels. You know, so there's a gap inside here. There's other highs and lows that are utilized multiple times. If you see a line hit 10 times before it was broken, you should mark that line. If you see a line only hit once and it's based off of current price, you should probably delete that line. That's a weak line. A line that relies on current price is just as good as nothing. I just wouldn't use it. Another thing too, a lot of people I see not messing up on, but I think need to work on is where they grab their top trend lines from, because a lot of people instantly want to grab it from here and go to here. In my eyes, that's not a very strong trend line because you're going from the high of this time frame down to the current price. That's not really helpful because clearly you see that you have a strong movement here to the trend line. That's a secondary trend. If you haven't seen that trend lines video, go check it out. Breaks down to our primary trend line. And then what do you have? Then you have a big move up. Then you kind of have some consolidation here.
then you have a drop again. So I don't want you marking just a bunch of random lines. Let me delete a couple of these. But I just want you guys to see that, because drawing that top line from here to here, that would not help you at all. So what you want to draw is about from here, because you have a strong resistance here. So there's a good flat line right there, and then you have your primary trend line that's starting from about here. So you have a more bullish pattern forming here. It's not really the greatest, not the prettiest, but I just want to let you guys know, if you grab a line from either high or low and you go and it has to rely on current price, the other second point, the second point being current price, it's not a good line. So just don't have that, because clearly you see it had a big retracement here on the secondary. One consolidation, broke. Now it's kind of just sitting in this range. We're waiting for it to exit about this range right here, this range that it's in between these two white lines at 546 and 526. So it's in about a $20 range right now. So that's what we're really watching for a bigger, more one-directional move from NVIDIA, which, if you guys haven't already learned the BB system, then you are tripping, because this system works on a daily basis. And that's what breaks down with our day trading. You know, my guys, they marked this level. They marked this range. You know, they made sure that this was marked on their charts before the day started. They make sure that the high is marked. They make sure that the low is marked, which low would be down here. Look where it caught support at. This is pre-market low. Look where it caught support at before launching. Look where it launched to. It launched above pre-market high, above that gap, filled that gap, and it even came back down and made a one-directional entry. So it came back down, 80% retest. Here's your 40%, your 80%, bounce, volume picked back up again, and now you have a new high. So now you're looking for above that level, and that's just something we cover every day in chat. We did this with over 20 tickers today. I can't even fathom that to you guys. There's just so many tickers we do this to daily, and I make a daily watch list, but all my guys, they start making watch lists now too, so it's even better. So now we're getting even more plays that are even more accurate in chat, and I'm really loving it right now. If you guys are not a part of our community, please click the link in the bio, and if you enjoyed this video, please leave a like and comment. I really hope this helped you, and make sure to check out the rest of the series if you haven't already.